Hey, welcome to this Thursday, the 21st of December. Hey, yesterday was, well, a pretty bad down day, but looks like maybe we got some green ink to bounce off of it this morning. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that in this world we live in, there are so many things that we have no control over. However, you can take control of your investment portfolio by knowing how much risk you have in your portfolio and knowing how much risk you should have in your portfolio. Hey, give us a call, 863-382-0037 to schedule your core retirement analysis. With David, we got him coming up next. Hang tight.
105.7 Light FM, the plain white tees. Around this shop, we call that casual day. It's 8:42 here. Time to check in on your money and find out what the heck happened yesterday on Wall Street. It was weird. Let's go down to Statler Financial Services' very own Phillip Statler, who's on the line. Phillip, if that was profit-taking, we pretty much took our profits yesterday, didn't we?
Hey, it was definitely a eye-opening downward movement, and if you looked at it at 10 o'clock and then looked at it at 3 o'clock, you were had a rude awakening.
I saw the dip and I was thinking, okay, I obviously missed something yesterday. The Dow fell by 476 points yesterday. The Standard & Poor's was down by 70. That was almost 1.5%. That was a bigger percentage drop than the Dow. And the NASDAQ was our king crud of the bunch. They went down 225 points, down a full 1.5%. And you and I were kind of looking at it yesterday morning and saying it looked like it was going to be a profit-taking day, but they took them all after 2 p.m. We were actually in green ink until about 2, and then the bottom fell out, didn't it?
Yeah, it really did. I mean, and for no expected reason. I mean, I can't find anything anywhere that would give us any indication. I think we came close to the afternoon break, and I think they're looking at Christmas and thinking, okay, let's take a little profit off the table and see what happens. And but we're definitely bouncing back this morning, at least on the futures.
Glad to see that. Somebody's kid must have needed an Xbox or something, and the computer trades kicked in. Yeah. Actually, just for the sake of perspective. Yeah, you look at a 476-point drop in the Dow, and you say Armageddon happened. But all we lost, and I was looking at about a 30-day, 1-month chart. All we lost was about 8 days worth of gains. That was about it, which gives you an idea of what a good month it's been so far. S&P and the Dow were both at about 37.1 for the Dow 7 days ago. Standard & Poor's was at just about 4,700 7 days ago. So yeah, it was an Armageddon level day, but it was only 1 week worth of gains. That was about all. So really, in perspective, it wasn't all that bad month over month, was it?
No, it really hasn't been. And so, you got to expect that the that 8-9 day run up we had, we expected something to happen. It was just maybe a little bit bigger than people anticipated.
A little? I mean, some days you just got to laugh because, I mean, anybody that bets their life on the indexes day over day probably deserves what they get. And yesterday you got what you deserved if you were stuck in the indexes short term. Talk about sell-offs. I mean, you mentioned it yesterday morning that FedEx had a bit of a miss. They kind of led the parade. Can you believe it? Big company, very successful, great heritage, down 12% in 1 day. That's one of those OMG experiences in the boardroom, isn't it?
Yeah, it really is. I mean, that was, and I think they probably took UPS down a little bit with them too. But it happens, right? You miss, and people start reevaluating your progress and what's going to happen in the year to come to start to unload it.
Oh, yeah, and you miss in the middle of a sell-off day anyway, and everybody just beats you up double times. The investors had brass knuckles on for FedEx yesterday. That was amazing. Kind of brings us up to this morning. First of all, yesterday we got the consumer confidence in. Once again, that was good news. Consumer confidence went up a little bit last month, I gather, huh?
It did go up a little bit. It was 102 for November. December is up to 110. So that's a pretty nice little little beat from that standpoint. And then you look at existing home sales, they beat the prior month. You had 3.79 million. The expectation was for it to go down a little bit. It actually ticked up to 3.82 million. So, I mean, everything looked really, really pretty good.
Investors didn't care any, but it was good news yesterday. Gets us up to this morning, and all those little improvement trends that we're talking about pretty much continue this morning. The usual Thursday first-time jobless claims. We had 202,000 first-time jobless claims last week. They were expecting 215 off one of my tip sheets. Went up just a little, right direction from the standpoint of the Fed, to 205,000, which is relatively good news. And then we got a revision on the gross domestic product. And last month when they said 5.2%, my bull crud detector went off real loud. Something was wrong with that number. Well, they revised it, and this is not a pleasant surprise for Wall Street, but it does get it back down into the notion of, okay, this might be more realistic. They're now saying the economy grew last quarter at a 4.9% annual rate, which it's still overly hot for an economy that's going through some consternation, but at the very least, it's starting to get a little closer back down into realistic numbers. Wouldn't you agree?
I think so. I mean, and that was lower than the expectation too. The expectation I had was 5.1, which was down from the 5.2. But I think that really is better. I mean, that the number is the number. I mean, I think we got one more. Is that the final reading?
That's the second reading. So
second
we got,
so we got one more.
Yeah.
So we got one more reading to come, and we'll figure out what the actual end up being, and then we start looking at what did 2023 actually, what was it, and we'll find out that about March or April next year.
Yeah, we had some pretty anemic numbers for the first two quarters of the year. I mean, we were talking like 1% and 2% growth rates, which kind of, given the state of the economy, made some sense. So a big quarter up will still probably end up giving us, in the range of a 3% number for the year. And that's within the range of reason, and it's about at the point where the Fed would like to see us be. They want to see us do 2.5% to 3% economic growth. That 4.9 is still indicating an overly hot economy, but following up on 1% numbers, it's not a point of great concern, but still, it does give reason for, wait a minute here, we sure haven't toned down the economy very much, have we?
Well, that's exactly right. And so it's just one of those numbers the Fed will look at. I don't know that it's one of the main numbers they look at, but obviously they take it into consideration along with that PCE number that they like to look at.
Yep, and we'll get the PCE number tomorrow, the personal consumption expenditures number that Jay Paulson talks about being his controlling decision-making number. Between that, though, and the first-time claims on the unemployment continuing to inch upward slightly, I got to assume there's no reason for the Federal Reserve to change their promise of no more interest rate increases, right?
I would think not. I mean, just based on what we've seen so far, and I would think that we would hold steady at this point.
I would think. Around and about all the mess that was yesterday and all the profit taking, I have trouble calling a 500-point drop profit taking, but that really looks like what it was. We had some reports out as well over the evening and into the pre-market hours this morning. I gather CarMax came out with a report. How did they do?
They did. CarMax had a pretty good quarter. They beat on earnings by about 10 cents a share, 52 cents. And so expectations were that they did well. They also announced that they would resume their share repurchase program. So they'll start buying shares again. And so that'll help their price as well. So you got CarMax making a huge jump this morning, Dave, up 10.75% right now.
Whoa. Waiting for the other publicly traded car chains to come out at that. That could be good news for the sector.
Yeah, it really could be. Then we had a chip company, Micron Technology. They reported they beat on earnings and on revenue. They also gave some strong guidance for their fiscal second quarter that were above analyst expectations. They're up a little over 7.5% today.
Wow. It's almost FedEx numbers in the other direction.
Yeah. I was trying to see if we had any other. I think that's all that I had on
I know,
earnings.
I know Nike is supposed to report later on today, and Carnival Cruise Line's also expected to report, but I don't think they're out pre-market.
No, they're not. They would come out this afternoon.
And that could be kind of interesting, too, from a disposable income standpoint, which obviously is important during December. Resetting the table, it was a big sell-off yesterday for no event-related reason, just basically taking a week worth of growth off the table more than anything else. And it looks like it kind of confirms that based upon the futures this morning. What are we doing 45 minutes early?
Hey, before I tell you, Dave, I wanted to say the 30-year Treasury is below 4% at 3.98.
Holy crud.
Yeah. So, hey, on the indexes, we got a lot of green ink looking good. The Dow up over 0.6%, $241. The S&P 500 is up 0.7. That's like $33. And the NASDAQ 100 up a full almost 1.1%, $175. Let's don't leave the Russell 2000 out this morning. It's up 1%. So everything's looking really good on that side of the coin. Silver's taking a little bit of profits this morning, down about 1/3%. Gold's up 1/4. Crude oil heading down 1.5% to $73.12 a barrel. I think from what I can tell, that's because of Angola pulling out of the OPEC situation. So they're no longer going to be a part of OPEC, and that's pushing oil prices down a little bit.
That cartel breaks up, it can only be good news for us, right?
That's right. Absolutely.
Pretty darn much. Looking overseas, the Asian rim market was almost a reverse of what it was yesterday. A little bit of a rebound on the Chinese mainland markets. Some of the markets around this Asian rim are kind of taking some profits. South Korea, Taiwan, Australia are all off by a little bit this morning. Overall, the rim is generally a little bit above the flat line on the strength of Japan, but not by much. Over in Europe, I got a little profit taking going on as well. Everybody's off, but not by very much. We're looking at 0.22% right now on the overall European stock index. So not a lot going on over there, but it tends toward being one day delayed from what we're doing and just not quite as precipitous, I guess would be the proper term. The whole lot of stuff needs to be done as far as one's financial planning before the end of the calendar year. Some advice is needed to know what to do right, Phillip. How do I find you to be able to make my retirement happen right and optimize it before the end of the year?
Then give us a call to walk through our core retirement design. The number to call is 863-382-0037. And then don't forget the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And one more time before Santa Claus comes tomorrow morning here on Light, you and me together. Fair enough?
Fair enough, buddy. Talk to you then.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember.
Hey, folks, again, as we head into this holiday, tomorrow will be not a full day of trading. But we'll be back here tomorrow morning. Join us then. Take care. Have a great day. Talk to you tomorrow. Bye now.